Tesla shares on the move this morning, pairing gains after the company entered an equity distribution agreement to sell up to $5 billion of shares. Phil LeBeau joins us.
So I'm sorry for anybody who clicked on the video because I thought I was some conspiracy nut who was trying to tie the price of marijuana to Tesla's recent announcement. But if you're a Tesla bull, if you're a fan of Tesla, or if you're a Tesla bear, stick with us. We have an interesting analysis. So Tesla released a statement today in which they disclosed their intention to raise up to $5 billion in share offerings. Wedbush Dan Ives said the capital raise is a clear positive and further solidifies the Tesla bull case. But does it? Stick around. Let's find out. So the stock was trading at $670 pre-market before the news broke, which is insane and amazing. Congratulations to everyone who held the stock. Then the stock dropped a little to around $620, but is currently trading at around $640 to $645. So consider the fact that this is the second time in 3 months that the company set out to raise cash with a share offering. They did back in September. So the question for investors is why Tesla's raising the money now? What does it mean for the company and the share price in the future? And by extension for investors or perhaps potential investors in the company or in the electric vehicle revolution more broadly. So I just want to begin my analysis by talking in general about why a company decides to raise money by selling stock. So a company wants to raise money for a number of reasons. It's really hard to give a broad explanation for why a specific company wants to because it's always different. But let's say they want to build another factory or they want to buy a lithium company, ramp up production. It needs money. Nothing in life is free, obviously. So what does a company wishing to pay for these things do to raise the money? So there are a number of ways that a company can go about it. So it can either go the traditional route. It can either borrow money from a bank or a private lender, or alternatively, the company can sell shares in the company. So a company owns shares in their company, usually the majority of the shares. They can just sell these shares like any one of you can. You can sell your personal shares and boom, you have money. The company does the same thing. So there are some pros and cons that I just want to discuss quickly. So one of the pros for selling shares to raise money is that there are no repayments later that would drain future cash flow. No debt on the books. And then the con is that it dilutes the company's ownership. So obviously the company wants to own as much as possible so that it has the biggest say in what the company does and how the company operates. They sell the shares, they dilute their ownership, and now they have less of a say potentially. So what about Tesla? So let's talk about that. So first, let's talk about timing. So the timing obviously makes a lot of sense because for those of you who are unaware, the price of Tesla is flying. The stock is up roughly 670% this year alone. Stock price is making people rich. It's over $600. And some of you might tell me that it was $600 earlier this year, but consider the fact that that's after a stock split. So the company, by all metrics, is killing it. The stock price for sure is killing it. So also consider that while most agree that at least in the short term or in the immediate term, the stock price is hugely overvalued, in the long term, the valuation does make a lot of sense. So you can check out my previous video where I interview a Tesla bull and a very, very smart man, a London School of Economics grad. So he gives this analysis, and essentially the conclusion is that Tesla has massive potential to do incredible things in the future. And that's not to mention the fact that the company's been profitable for the last 5 quarters. And it's going to be added in late September to the S&P 500. That's been big news. So basically the company has left its competition, including Volkswagen, GM, Toyota, in the dust for now. Now, Nikola is still somewhat of a concern, but I hear that Trevor Milton is potentially expanding into the license plate and grave digging business soon, so I don't see it as much of an immediate concern. So also consider that Goldman Sachs upgraded the company recently to a buy and raised their price target to $780, which people were mind blown by. So that's also, all of this is essentially to suggest that if there was ever a good time for Tesla to raise cash, it would be at a time when confidence in the company is through the solar roof and the stock price is flying high. So in terms of why the company is raising capital now, let's talk about that. So there are a few potentially sound explanations, and then we'll discuss some speculation. So first, let's see if history can tell us anything about the move. So again, as I mentioned, the company also raised $5 billion in the same manner in September. So that time they said that the move was specifically in order to ease its future debt pressures as the company seeks to massively expand production of its existing vehicles and build new factories near Berlin, Germany and Austin, Texas. That's what the company said. So what's happened since? So Tesla's in the process of building the new factories in Germany and Texas. Building these factories is obviously extremely expensive and capital intensive. So they're also in the process of launching new vehicles for mass scale production in these factories, including the semi-truck, I'm sure you guys all know, the Cybertruck, and a cheap compact car, which they revealed on Battery Day. So the company actually recently said in their 10Q SEC filing that, quote, "We are simultaneously ramping new production in products in Model Y and Solar Roof, constructing manufacturing facilities on 3 continents, and piloting the development and manufacture of battery technologies." The company is doing a lot, putting themselves in a lot. So what does that mean? Operating expenses for Tesla jumped 33% in the third quarter from the previous 3 months to $1.25 billion. So during their Q3 earnings conference call, Tesla CEO Zachary Kirkhorn warned that the company is increasing its planned capital expenditures. Specifically on their recent 10Q SEC filing, they also disclosed that, quote, we currently expect our capital expenditures to be at a high-end range of 2.5 to 3.5 billion in 2020 and increase to 4.5 to 6 billion in each of the next 2 fiscal years. So that's up 12 billion over a 2-year period. So for those of you also who watch Battery Day, you know that they're also trying to get into the battery business, as we just discussed. So let's talk about some analysts. So Dan Ives imparted some of the same sentiment as to why they potentially are raising the money. He said the company is now in a clear position of strength and out of the red ink, with major factory builds out on the horizon, Austin, Berlin. Musk and his red cape are raising enough capital to get the balance sheet and capital structure to further firm its growing cash position and slowly get out of its debt situation, which, by the way, throws the lingering bear thesis, he says, for Tesla out the window for now. So now that we know pretty much why the company is raising money, let's speculate for a minute. So there have been reports that Tesla is planning to open up a new factory in India. Obviously, that would be a game changer. That would be incredible for the company. Speculation, so we're not sure. Obviously, we'll have to wait and see. But maybe that's why they're raising capital, potential. Also buying a lithium company. Maybe they're buying a lithium company. You know, in terms of the lithium company, they have been dabbling in the lithium business for quite a while now. Maybe they'll buy a player out and further solidify their vertical integration. They make the machine that makes the machine. Imagine they own the lithium company that produces the lithium to put into the lithium batteries, et cetera, et cetera. You get the point. So thank you so much for watching. Really appreciate your time. Please like, please subscribe, please comment in the video. I would really appreciate some of your thoughts and be happy to respond and have a discussion about what you think I might have missed, or I should do, what kind of videos I should do for next time. So have a great day, and we'll see you next time.